Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call, 23rd of January, 2026. I'm Mark Gardner. Trump's taco, or chickening out, and reversal of the threat of tariffs on the EU, and announcing a framework, and I put in that in inverted commas because this is, if you think back to the tariffs and Liberation Day, he did exactly the same thing and then announced a framework with a bunch of nations that he hadn't even spoken to yet. So that's just his way of chickening out without actually, saying he's chickening out. I don't think there is any framework. There's been no confirmation from the European side. Very similar to when he said he'd announced a framework for a deal with China on tariffs as well. And here we are, nearly 10 odd months, 9 odd months down the line, and everyone's just forgotten about the framework. But, credit to the guy. He, no one's questioning him about the framework that he put in with China, that hasn't materialised. His tactic of just continually distracting from things and making threats and trying to use it for leverage is just, he seems to think it's working. Otherwise, he wouldn't be continuing to do it. But it's getting him a little bit tiring from a market standpoint. It fully re-energized the tech rally last night. As you can sort of see here, Nvidia, Meta was up on an upgrade. Tesla was up for actual fundamental reasons. Austin, Texas, they had the first day of non-supervised, non-monitored cybercab in Austin, Texas yesterday. Which is a huge step in the progress of that potential business. Austin's been Texas has been a bit of a leader in it. They haven't had any incidents as yet. I dare say everyone will just be watching and waiting to see how it goes for probably 4 to 6 weeks, and then I would imagine the floodgates will start to open. That fully self-driving market is enormous. It's potentially $1 trillion a year, depending on which. How consumers and travellers want to use it, etc. Very hard to get a total addressable market realistically. But if you're going into the realms, there are other estimates that are even more than that. I've just sort of tried to go to the midpoint, because as it is with total TAMs or total addressable markets, it is a guess. It is not science. But as you can see here, we're a bit of a bounce back in Intuit, ServiceNow, Salesforce, which have been getting really smacked up. Those AI potential AI monetizers. Meta's up 5.6 on an upgrade from Jefferies. Pretty sharp reaction to an upgrade. It's not really that normal. But just broadly higher overall. We did have a fair bit of earnings. Intel's kind of ruined it. They missed quarterly guidance. Basically, Intel's a basket case. If it didn't have critical manufacturing or chip making ability, it'd probably be gone. But now it's government backed, basically. So go capitalism in the US. But it's down 9% in the aftermarket. So, and people keep asking whether it's cheap or not. Well, no, it's not. Otherwise, it wouldn't need government backing. And look, we got Alcoa, Aluminium. It rose 4%. Aluminium demand, not really spoken of. Everyone's talking about critical minerals and rare earths and lithium, but aluminium and copper, really, traditional metals that really have more supply deficits and way more demand than those other niche ones. And I would expect that to continue higher. One of our faves, Intuitive Surgical, rose 2%, stronger than better results. And Spotify got an upgrade as well from Goldman Sachs and rose 2%. And we had Netflix got a little bit hit as well. But sort of it pared back the losses because it was down around about 7% after its earnings. And you see the CEO out there today really beating the drum on Bloomberg, doing some media, talking about the gaming section and essentially that Netflix is now a console on your TV and the controller. So, obviously he's out there, really doing a bit of PR and marketing after their fairly soft results. So whether that's concerning or whether that's a good thing, I'll leave that up to you. Precious metals just continued. So Trump's continual flip-flopping doesn't do anything for certainty. So that's where we've had pretty good recovery in the Aussie market there. I would expect the Aussie tech market is absolutely just beaten down for very little fundamental reason. Some of the best names in our tech sector and like previous absolute market darlings are down like 55% from their highs, most of them in October. And we really haven't had any there hasn't been any, there's been an AGM or whatever, but there's been no significant movement in any of their earnings or anything. I mean, Xero's got an acquisition, but, it was nearly at $200 and I think it traded 94 the other day. When it was getting beaten down, WiseTech was at 60. Technology One's getting hit after great results. Their new software's awesome. REA's been getting belted on the back of, all this speculative stuff that, we've known for 3 years, but, all of a sudden now the price is down, we're all worried about it. We weren't worried about it before they went down. That's just how the analysts work in Australia now. They, they won't show you the risks until the price goes down, and then they just dig something up to justify it. So yeah, but look, overall, Asia a little bit soft, but it'll recover today. Where the Russell up yet again. It's been the best one in the US indices, but I mean we're still slightly down in the week for the Dow's, S&P, and Nasdaq. Yeah, look, platinum was the star last night. Go platinum, and up 6%, 8 for the nearly 9 for the week, and I think it made fresh record highs, nearly at 2,600. Silver continued to rally, which I'm going to say we've been a precious metal bulls for 18 months or more here at MPC, and I was genuinely surprised to wake up this morning and see that precious metals had gone again. And I think that's just a reflection of while Trump tacoing and there's not going to be as much geopolitical potential geopolitical unrest, and he's calmed things down with Europe, etc. His constant just backpedal is just causing just general uncertainty. And with their concerns around the monetization of AI, etc., blah blah blah, and the US and the US dollar, people are just there's no real reason to stop buying hard assets, and from an industrial commodity standpoint, in terms of locking down your supply chains, because there's just-in-time supply chains that we used to have pre-COVID are now basically dead because of all this, because of the last few years. And everyone's scrambling to make sure that they can get their raw materials. But in the precious metals, I think it's very much a reflection of a lack of confidence in the US dollar, in the US administration, and the world coming to the realization that either the US dollar is going to get downgraded yet again, or then they can't pay off that debt as bond yields rise, or they're going to have to. The only other way out of it's war, and he keeps threatening and kidnapping sovereign nation heads and God knows what. So, all of which are good for precious metals. So, yeah, we'll. So there, I'm just going to keep this list of the risks. Greenland EU US relations really did sort of come off, but we've still got this shutdown vote in 10 days. We've still got the central bank stuff. We've still got Supreme Court decisions on the legality of tariffs and Fed appointments. So I just want to, and because of Trump's just general blitzkrieg of just stealing headlines, I'm gonna leave this slide in every day, and we'll just cross them off as they, or address them as they come along, because it's really easy to forget what's going on, what risks. And look, and if there's some positives that start to go up, I'll start a positives column. But at the moment, the positives column is pretty insignificant in terms of after one of the best 4-year rallies in 30 years, and and all of the gains in AI, etc., from last year, they're I wouldn't say it would classify as as high conviction, overwhelmingly positive. So we're just going to monitor these risks. So I don't want you guys to give away your profits for the last 4 years. It's been a good run, but there's sometimes it's sometimes cash is a great position. So look, and next week's earnings is going to be a pretty decent sized week for earnings. FOMC meeting is the massive focus. No one's expecting no one's expecting them to move rates. We do have Australia Day Monday. I don't know whether they've changed. I believe it is closed on Australia Day, but recent woke adjustments to Australia Day may mean that it's not a public holiday anymore. Who knows? But the big ones are United Health, which has been in a fair bit of trouble in the last couple of years, but it used to be the world's biggest healthcare company. They're on Tuesday. Hopefully, we can start to see some turnaround there. We've got RTX and Northrop Grumman, Boeing, so big day for defence on the Tuesday as well. Wednesday, we start to see Mag 7 come through. Microsoft and Tesla, technically Tesla, maybe not Mag 7, but ASML, which is a key, photolithographic for chips. They're super important, sort of on that foundry sort of level. Like if they're getting big orders, like TSMC is their, those base foundry. Apple on Thursday, a few of the payment companies and some of the oil companies later in the week. As well. So, but FOMC will be the big focus, I would imagine. We've got some Aussie inflation data, which will be pretty key after employment. Was a little bit stronger, I believe, yesterday. We just want to keep those rate hike talk at bay. If you want to know more, you can download Mosaic, get your free 1 month trial, get all our recommendations from all 4 of our stock recommendation services. You can follow us on at MPC Markets on Spotify, YouTube, Apple Podcasts, we've got our weekly podcast, Bulls versus Bears. Kai Chen and myself will be hosting that today. If you want to have a listen to that, and it's a bit more of a in-depth weekly focus on the markets, but also we're going to focus on the track record of Trump's all the statistics around Trump continually tacoing, and try to get give you some certainty around how much you should be listening to them and how much you shouldn't be. But Aussie market today. Gold, silver, precious metals are going to continue to go. I would imagine the materials sector will do pretty well, but the tech sector, I think, is probably the cheapest. I said that yesterday as well. I would expect a fairly decent-sized bounce in those. So thank you very much, and we'll speak again tomorrow.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.